have you ever wondered what type of life insurance is best for you? Continuing in this series today, we're going to talk about term insurance and how to structure that for your benefit. My name's Steve Larsen with Produce Freedom, and I help people find financial peace so that they can live their passion and purpose and give back to those that they love and the communities they're involved in. So in our last video, I gave you a little bit of an introduction into the type of companies we want to look at to make sure we put these things in place when it comes to putting in place life insurance. Now today I want to talk about the different basic types of life insurance. There's term and there's permanent. So term is typically it's 10, 15, 20, maybe 25, 30 years in term, and then it stops. And then there's permanent, right? So permanent means that as long as you're paying the policy premiums and they're paid, then your policy won't lapse and you'll for sure have coverage by the time you die. Now the thing to know about term is that 98% of term policies are not paid out, either because they term out and people don't renew, or they term out and people can't qualify, re-qualify through their medical examinations to renew. And so they likely they lapse, and then by the time they actually need them, when they're old or when they're unhealthy or something happens, then they can't get any more. Okay, so let's talk about term today, and talk about when is a good time to use them. This is a basic term coverage. So if you're looking, most of Wall Street says buy term and invest the difference, and we're not really going into that argument today, but this is what they're saying. They're buying a relatively low cost insurance policy to get coverage. And so in this situation, you're paying $705 a year, which is $50 some odd a month for a $1,000 death benefit. Now this is a 20-year term based on a 40-year-old person with kind of an average health. And when you scroll down to here, after the 20 years is up, then you see that price jacks up to about $14,000, almost $15,000. So you go from $700 to $14,000, and then it goes up every year after that, right? In order to keep that in force. Now, this is where I was talking about why they don't get paid out. Let's say that you're coming close to 60, it's about to term out, and you don't want to pay this $14,000, and so you don't renew it. Then you go back to underwriting, and they find something in your blood or your analysis, and they say, hey, you're not insurable, or you're insurable at a worse rate, so it becomes even more expensive. And so that's why on the term insurance, it's really just a cash cow for the life insurance companies, but they do have a benefit. So if you do need term insurance, I'm not saying term insurance is bad, it has its place. You want to make sure you look for a policy that has the ability to be convertible into permanent insurance. It has a convertibility feature. And so in that sense, you want to make sure that your term insurance is even written with a great company, which we talked about the rating system and things like that in the last video. So when should you consider term insurance? These are some kind of milestones. When you have a change in a family situation, you just get married or you have kids, where you just bought a large purchase like a house, or you bought a business and you want to make sure that any of that debt obligation is covered by insurance in your passing, make sure you do that. Now, if you have business partners, you also may want to get term, because we want to create what's called a buy and sell agreement. And usually this is drawn up by an attorney. And what happens is you use the insurance to buy out the other partner in the event of their death. And what that allows you to do is, if you're running a business, if I'm running a business with my buddy Frank here, and Frank passes away, we know how to run the business together. We've been running the business for years, and we don't want it to go into his trust or into his family, and then his wife or kids have a say of how to run the business, and it ends up tanking the business because they don't understand the business. They just, they want to get their money out, and they don't understand that, this takes time, and they want to make sure that the operation of the business is a good going concern. So that's what a buy and sell agreement is. So those are some key things for buying term. I would say term coverage is definitely better than no coverage at all, but there's some other ways where we can change your life insurance from an expense into an asset. And so in the next videos, we're going to be talking about universal life and whole life and how those come into play. So hopefully you come back and join me for those. Thanks. Talk to you soon.